Wedbush securities analyst Dan Ives joins us at Post 9 to discuss some of those figures. I suppose we should start with Apple. You appear to be comparatively good enough for now is the expression that has been used. Does that make sense? Going into an iPhone 16 cycle that hasn't even started, I'd argue that was about as bullish as Cupertino and Cook could have made it, not just with regard to the guidance. I believe that China is starting to turn around because this is their final quarter of bad results for the year. Take a look at services. That seems really solid to me. I would rate it a 9.8 relative on a scale of 1 to 10, which is why I believe this stock can withstand the current headwinds. Going into what I see as an A-driven supercycle for the iPhone 16, it's difficult to be pessimistic about Apple. Will that strength be debated against the concerns of the macro consumer that we just discussed for 10 minutes? That would be the point of contention, you see. However, I'll be in Asia once again this week, and from what we've observed, we started with 80 million devices for the iPhone 16 and are now up to 90 million. We've discussed this a lot, so it will be a balancing act. However, I think the story of the AI revolution is still intact when it comes to the data, the quarter, and what you saw from Microsoft, from an Azure perspective. You look at what you saw from Google, you look at what you saw from an AWS viewpoint for Amazon. Even though the market is showing signs of weakness, this is not a time to worry, according to all of our checks. According to the Financial Times, Elliott Management recently informed investors that Nvidia is in a bubble and that the hoopla surrounding AI technology is not being matched by reality. I know you disagree completely. I couldn't be more at odds. We were here prior to conference calls and earnings, and I believe we even discussed it. Now let's examine the numbers. Examine the Azure acceleration and the AMD discussion Lisa Su gave. We observed Azure's acceleration, which we felt was disappointing, and that they are directing toward the second half. This is where the monetization is discussed in detail. Look, the haters haven't stopped hating, in my opinion. For the past few years, the bears have been there. I understand that it's simple to walk out into a packed auditorium and sort of yell fire. Since it's not solely from the call, we don't see it intact. You see that the buzz is matched by the value. In fact, I believe the street is underestimating the trillions of dollars in AI capital expenditures that will occur across all its companies over the next 3 to 4 years, and that is in no way diminished by anything we witnessed here. Dan, you're correct. To your point, none of them are abandoning their capital expenditure plans. I'm referring about AWS, where revenue growth actually accelerated, rising 19%. However, there is still the more significant question of whether you will eventually see that return on investment. You clearly think that will be the case, but what do you observe in terms of upcoming applications that will begin to allay some of the concerns that some investors might have? The use cases and the number of enterprises currently on the ag route are risen 45x from an enterprise viewpoint, as Godfather Bay Jens at Nvidia will explain in a few weeks. Thus, these businesses are headed toward what I think will be use cases in the fields of retail, insurance, healthcare, and finance. The key is commercialization, as we have always discussed. The money is there. And I believe that this transformation is taking place when you consider what Sue and Nadella said, as well as what we discussed from Sundar and Jassy. Right now, the monetization phase is just getting started. To bet on this, and to bet against it, in my opinion, is like betting against Cook and $2.2 trillion in terms of where we ultimately see the actual install base. And you look at, actually, right now, an AI revolution coming to Apple. That's a tough bet. I'm not going to say that we'll have an air pocket between the capital expenditure and when revenue comes. Do you think it could last a year? Would you become anxious if it didn't happen within a year, right? That is, if the rhetoric doesn't alter. If we sit here in January or February and we haven't seen it, we haven't seen the monetization from a software perspective, we haven't seen it from an actual monetization outside of just the Magnificent Seven, to call it the second, third, or fourth derivative, then, of course, we have to look at it. Right now, though, I feel more confident because of what we see, including our checks and earnings. Bill McDermott has never said anything unfavorable about AI. He has, after all, turned around before, and even though many people are currently kind of adding gasoline to the fire, I'll take McDermott, Sue, Nadella, and Cook if they see something. Get your Nvidia keychain quickly for less than $10. A huge discount is being offered, but only for the first 100 orders. Finally, I'll discuss Nvidia, where the Blackwell platform is experiencing delays. In the industry, design delays are extremely prevalent, and their major clients and partners are aware of this. However, the fact that demand is robust is what counts. Their current platform, Hopper, is experiencing extremely strong demand. Their ecology is still thriving. Furthermore, Nvidia is at the center of this still emerging digital and artificial intelligence infrastructure. That's why I still adore that name. How much do you believe Nvidia is worth now? At $984.80, 12 or 24 months from now? I believe the company is worth a lot more than it is now. I can't give you a particular price target, but I can say that based on what I've seen in their customers' environments, including cloud environments, Nvidia solutions are being invested in by their customers, who are reaping the benefits. There is a change in those surroundings within businesses. Examples include the use of digital twins in manufacturing, the use of Nvidia technologies to speed up drug discovery, research on climate detection, and financial services fraud detection. As a result, a wide variety of novel use cases are becoming more popular, and in my opinion, those will be much larger in 12 and definitely 24 months, and Nvidia will see that in their financial statements, which will influence the performance of the share price. Currently, Alphabet, Meta, and Microsoft are all relatively inexpensive, but their valuations will increase. I therefore did very little over the past few days. Like I indicated on the air, I did purchase a small amount of Facebook, or Meta, during the major drop, but it hasn't made a difference because the market is trading like it always does during volatile times. They fail to discern between exceptional management, entrenched growth, and fortress balance sheets. They are eliminating them all. Therefore, I am unsure of the catalyst. As we said, I believe that the economic data that will be released this week will be the catalysts for the future, because if the data is negative or indicates a struggling economy, it will bring them all to ruin. That's where you come in. The issue is that I have nothing to do during those days, which is why I dislike the market return at these levels. I don't buy the momentum, and I don't sell my core names. In order to discover others and add to my already full holdings, I need a true washout of the market. Jimmy the Semis. Look, after the sell-off, Keith Lerner at Truist has upgraded the tech to overweight now. This is one topic that comes to mind when discussing what people find more appealing. Let's just look at Nvidia's performance this week when comparing semi-name brands. It's not necessary to bring up Nvidia in every semi-conversation. Cadence and TLA, ASML, Lam, Applied, Onsemi, Teradyne, Qualcomm, and Taiwan Semi are all up 10.5% this week. They are now for sale. I don't mind if you don't want to discuss Nvidia. We can still discuss Qualcomm. They are now for sale. Not that long ago, Qualcomm was worth $230. Today, it's around $165. Furthermore, the company's prospects haven't really changed in the past 2 months, to be honest. I therefore love it even more here if you loved it as much as I did when it surpassed $200. Regarding your statement, I don't care if you get into Qualcomm with me or not, Steve, you're right. Today isn't your day. Give it a week or a few days. This is simply the current state of the markets. Returning to what I said before though, if you enjoy Qualcomm and Applied Materials, which I also own, and you don't have enough of either, you can